Hi, everyone. Thanks for tuning in to Passport to Wealth, the podcast that takes you on a journey through navigating your finances as a U.S. expat. I'm your host, Arielle Tucker, a certified financial planner and enrolled agent focusing on cross-border planning for U.S. expats. And I'm joined by my co-host.
I'm Savannah Chafin, a CFP candidate, enrolled agent, and self-declared expat tax nerd, here to guide you through the maze of life and finances across borders and share the inspiring stories of fellow U.S. expats who have navigated the process.
Hi, Arielle.
Hi, Savannah.
So it is 2025. Technically not yet. We're still recording this in 2024, but by the time it's released and everyone hears it, it will be 2025. So as it's the new year, it's the perfect time to kind of reflect on our financial health and set goals for the new year. Today, we're talking about setting and sticking to, keyword sticking to, financial goals for 2025. So today we have some tips, strategies, resources, everything you need, right? The master list to help you make 2025 your most financially successful year yet.
Yeah, and I think this is like a build-up from our last episode, which was like our SMART episode about how to actually set goals. And so really it's just building on that and really thinking more on the financial side of things. So not just about saving more or spending less, but really creating that roadmap that aligns with your priorities, whether you're working towards, I don't know, an early retirement or regular retirement or buying a home or paying off debt or maybe even traveling more. We really want to work a little bit more on what those financial goals are for you this year.
So how do expats actually set meaningful financial goals? Step one is to reflect on what is most important to you. So what are you planning for? Are you saving for a property back home? Are you looking to build out your emergency fund in your host country's currency? Are you planning for international schooling or potential relocation? Or are you close to retirement and are looking to kind of solidify your savings there? It's really important to write down your priorities and categorize them as short-term, medium-term, and long-term goals.
Yeah. And so then step two is really getting more specific. And this is where it can get tricky or feel a little bit more overwhelming for expats. So if you're saving for retirement, you need to ask yourself, wait, am I eligible to contribute to a U.S. qualified retirement account? Or should I be taking advantage of my current residence country pension plan? Really understanding that next layer of knowing what the tax implications are for each option is so crucial to setting those realistic and also effective goals.
Yeah, and that kind of rolls into step three, which is to understand your dual financial landscape. This means reviewing both your U.S. and foreign income tax obligations, as well as, saving options. So, for example, if you're living in a high tax country such as France, you may need to structure your savings differently than if you're in a low tax country like the UAE.
Which I think is actually like a no tax country.
Yeah, I think so too, actually. But yeah, kind of understanding this difference will really help you figure out what's realistic and where to focus your efforts. And I just want to highlight, we're posing questions to you today, but we're not going to magically answer all of them. We're highlighting things that you should really look into because, again, every country is different. Your situation is completely unique. So we're just kind of, trying to highlight how you can get there.
Mm-hmm. Yeah, exactly. We're here to help you think through common issues that we're seeing. And that goes to really setting those meaningful financial goals. So identifying what is important to you, right? And then this really just takes a pause to sit down and think about like, what is most important to me? And maybe you're in crushing debt right now. Maybe you went to school in the US and you came out with $200,000 in student loan debt, or you still have a US credit card with, a 30% interest rate on it. That needs to be a goal that needs to be, thought about, right? Paying back that debt first so that you can kind of have additional funds for other things that you want to do. For paying 30% interest rate, it doesn't leave a lot of room to save. A thing that we talk to our clients about is saving for children's education, right? You may be living in a country and you don't see your child going to those local universities. Maybe you really want them to go to your alma mater or, another U.S. University. That's really expensive. And so making sure we're saving for the right goals, or maybe you want them to go to international school and your company only covers the first 5 years of international school, and you're going to be left picking up that bill for the last few years that they finish out. Or always, I think you should always be thinking about, how am I investing in my future? That could be investing in yourself through education. That could be investing in the stock market, investing in a retirement account. How are you investing for yourself? And that's something I think you should always be doing, even as you work towards other goals. So really start to write down your goals and then categorize them as short, medium term, and long term. Short term, I always define as like 0 to 3 years. Is this an immediate goal? Are we cash flowing this goal? Meaning, are we using cash that's coming in and we can just kind of take a portion of the cash that's coming in and pay for that goal? Are we going to have to touch some of our bank savings for that goal? So maybe we want to buy a car, and maybe we're doing a mix of cash flowing that purchase and taking a little bit out of our savings, bank savings. Medium term, anywhere between 3 to 7-ish years, around there. And then long term, that's really like 10 years out that we're thinking about.
Yeah, and one key point that really comes up in my head when I'm thinking about medium term or long term goals, especially as an expat, like I don't know where I'll be realistically in the next 5 to 10 years, right? Will I still be living in Austria? Will I have moved back to Germany? I don't have an answer to that. So I think that's an important point to really kind of evaluate with yourself, right? Especially when looking at US retirement accounts, if you're living abroad, if you don't know which country you'll end up in, it's important to consider that, like where you'll be in the future when you're planning more long term.
Yep.
Yeah, so step 2 is really to get specific. We mentioned that we talked about SMART goals in our last episode, but I'll just quickly touch on it again. Vague goals like I will save more money or I will spend less are much harder to stick to as opposed to SMART goals, those that are specific, measurable, achievable, relevant, and time-bound. So yeah, go listen to our previous episode if you want to dive into how exactly to kind of build out these goals a little bit deeper.
And it's so important to review, like, and this is a great exercise to do in January, like review what happened in 2024. Where do you actually stand with your current finances, including your income, expenses, savings, and debt? This is really going to help you figure out what's realistic and where you need to focus your efforts.
Yeah, and then once you've identified your goals, it's really time to prioritize. So not all goals are created equal. Some, such as building an emergency fund, are really urgent and should come first, while others, such as saving for a vacation that is optional, right, can be tackled a bit later. So it's really important to identify which goals are the most necessary and important and really prioritize those above other ones on your list that may be more fun.
Yep. And so we want to take these goals that we may define for the whole year, but then break them down into much smaller milestones that we can check in on. So if your goal is to save $10,000 for a down payment on something, then let's aim to save $2,500 each quarter. So these are the mini goals that help us stay motivated and track progress. And honestly, sometimes when I'm trying to save like for a lot of cash, there's these really cool like downloads that you can get online, and they're like, you can kind of color in different amounts that you're saving, and you can like just put it on the fridge, and like you can actually start to see the progress that you're making as you like color in the little boxes, and it just helps like illustrate that you are making progress. I mean, especially for people in Switzerland, right? We might have to save 253 or 300,000 Swiss francs for a down payment on a home, or much more than that. And can be such an overwhelming, right? We're not probably saving that in a year. We're saving that over years. And so it's really important not to just get discouraged and burnt out by those like really large goals that we have. Another biggest goal for most people is retirement, right? We need to save millions of dollars potentially. We don't want to get overwhelmed by that. So we really want to figure out, how do we stay motivated and check in and say, yes, we're on track for this goal.
Yeah, I really like that idea. It sounds like fun. I like little visual stimulant things. So, but yeah, there's a lot of tools out there that can help you stay on track. There's also a lot of budgeting apps like YNAB. Have you seen that before?
Yeah, You Need a Budget. Do you know that one? YNAB stands for You Need a Budget. And then Budget Baker and Lunch Money. These are all great apps to help automate your tracking and really give you those insights on like how you're actually spending or saving. And what I like about these three is they actually work for expats because they actually report multiple currencies. And I have a lot of people who come and they move to Europe and they're used to they love Mint, but Mint doesn't work here at all. And so it's like, okay, well, what can I use that's not Mint? And I still think the Mint platform is really great, and I think Mint is actually closed now, but it was great. These are kind of like other options for expats, for people who really do enjoy doing budgeting like on their phone every month.
Okay. Yeah, I feel like I'm very tech forward for most things, but I've just had my budget in a spreadsheet for like my entire life. So
yeah. That also works. I mean, I think it's important that it doesn't have, like, whatever works for you, whatever will actually get you to do it. If an app works for you, use the app. If an Excel spreadsheet works for you, use the Excel spreadsheet. Use the thing that actually works for you.
Yeah, agreed. And then don't forget accountability. So make sure to share your goals and your progress with a partner, a friend, a financial advisor, anyone who can really help you stay on track and also celebrate your wins with you. And then do regular check-ins, whether that be monthly or quarterly. That's a really great way to measure your progress, make adjustments as you need. Yeah, and I think, Arielle, you had an example about this that you wanted to mention.
Yeah, so I think people are like, oh, you're a financial planner, you know everything and you don't need to do like check-ins and stuff. And I would actually say the opposite. Like, I still surround myself with community. So I'm in, like, for example, like a finance fight club with other small business owners, right? Where we're really like being accountable about doing our budgeting and in our accounting and make sure we're meeting the targets that we're defining for ourselves. And then I'm also in a Women in Finance book club where we're talking about money and goals and finances. And so I find it is so important to surround your people who have goals and then will encourage you to work towards those goals, and you encourage them to work towards their goals. Those are the people that I want to hang out with. Like, I love talking about money, and I love, talking about goals. And so if I can find people who are like, let's talk about these things, that gets me really excited.
How do you find these people, Arielle? I feel like I hunt and can't find, so please give me all the tips.
I mean, honestly, through different networks that I'm involved with. So again, I've mentioned a few times that I'm a member of the American Women's Clubs. And also, I think on LinkedIn, I'm very active on LinkedIn. And I found like some great female in finance founders who kind of have very similar like mindset to me. And so just kind of like, I've also created some, right? Like, so I wanted to hang out with other small RIA firms that had hit, 6 figures in their first year. And so I just created a group of people to hang out with because I couldn't find people on the same trajectory as me. So I think it's just important to find your people. And if there isn't a group, create one.
Yeah, good point. All right. So next, let's dive into some common financial goals you might want to consider kind of over the new year. And that is first, building an emergency fund. So aim for at least 3 to 6 months worth of living expenses. This really gives you a safety net for unexpected expenses like car repairs, medical mishaps, unexpected trips home, a late tax bill, something like that. And it's really important when you're living abroad that you're keeping your emergency fund in your resident, like where you're living in that currency. So if you're living and working in euros, make sure this emergency fund is in euros and is also readily accessible. Don't put this in like a long-term investment account, right? Or like a tax or brokerage account. You want to make sure that your emergency fund is accessible.
It's so important. Yeah. And I also recommend sometimes having two. So like a lot of our clients will like live and work in one currency, but they may all still book all of their travel in USD. And if your travel budget is, $15,000 a year, then let's hold at least $15,000 a year in that US bank account. Like, so we're not having to constantly transfer money. So it's like first our emergency fund, which is where we're expecting to have those expenses come out of. And that again is likely the currency that you're living and working in. And then the second one is sometimes like a supplemental US like emergency or, 1 year budget. I always say 3 months if you don't have kids. But if you have kids or you have like, you're still on probationary period or something, then I would say like a 6-month emergency fund.
Yeah, and another thing here is, right, you're building up an emergency fund, so that's kind of like a pot of cash. And like a huge issue for expats is a lot of foreign banks don't give you interest accruing accounts.
Yeah.
So that's another one that's a bit tough, but if at all possible, find a way to earn interest on those funds. So like look around at all local banks, like explore your options, look at online options as well, and really see if there's any option out there that does pay you at least a little bit of interest so you're not learning, like kind of missing out on that.
Yeah, but I mean, again, this is our emergency fund. And so I would much rather have you miss out on a small percentage of interest rate and have that liquidity in case of an emergency than feeling like, oh my gosh, I have to tie this up in some bond or something. And then it's not liquid and it's not actually accessible to you when you need it.
Yeah. Just clarifying, I wasn't saying to invest it.
Okay, good.
I was just saying find an interest-bearing account
we get that
if
question
possible.
so often where it's like, oh, I just hate to have this sit. And it's like, if it's sitting, it's doing its job. And it's not 3 months of income. I think that's another thing, right? If you have a high income, we're not trying to save 3 months of income. We're trying to save the actual expenses, right? And those are usually your fixed expenses, not your discretionary expenses, your fixed expenses. What is your rent every month times 3, right? What are the things the expenses and the bills that don't go away regardless of whether you're working or not, your health insurance, those types of things. Another thing that we talk a lot about is paying off. So emergency fund always, like, that should always be in place. And then we're making sure if we have debt, we're reviewing that debt. There's good debt, bad debt, right? A mortgage, you're going to have that for a long time. And hopefully it's at a reasonable interest rate. But then if we look at like maybe old credit card debt or maybe student loans, like especially those private student loans, a lot of those rates can be really high. So making sure we're really just evaluating and creating awareness to what do we actually have, what's actually going on, and getting intentional about, do we want to pay this debt off or does it need to stick around for a little bit? If you're already debt-free, awesome, congratulations. Then it's really important to consider then boosting your retirement contributions. And an important point here is even if you are a U.S. expat living outside of the U.S., you still have the opportunity to save in U.S. retirement accounts. So like a traditional IRA, for example, as long as you have earned income. And we've talked about that in other episodes as well.
Yeah, and then after kind of checking the retirement savings off your list for the year, you can really start looking at big ticket items like a new home purchase or a dream vacation that you want to take with yourself or your family. Those can also be really great goals. It's really just important to make sure you're balancing these with your long-term priorities and short-term priorities, right? So like investing, all of the other big ones that we talked about. And then when it comes to investing, if you're not already in the stock market, you don't already have an investment account, now might be the perfect time to start learning about it and taking actionable steps to open these accounts.
Yeah, it's so true. And I think this can be where it feels really overwhelming if you're struggling to open up accounts because you are living abroad. I mean, just 2 off the top of my head that I would say if you're listening to this and you're like, no, but I can't. Well, check out Interactive Brokers. They pretty much work in every country. And the other one is to look at Charles Schwab. They work in a lot of European countries. So those are 2 that you can open up accounts as an international person. If Charles Schwab says no, go to Interactive Brokers. They pretty much work for all clients. And if you're just getting started on your journey and you're like, well, I can't buy US ETFs, you're right. You might not be able to. You're just getting started in your journey. Let's just look at, buying a couple stocks just to kind of get started. And I'm not saying just like stock pick, but you can do some research and find quality companies that you believe in. And just, if you're really just working on your first 5, 10, 15,000, find a company that you really believe in that has a long proven track record and just buy that and start there. But don't just get stuck in cash and say, I can't do it. It's too hard.
Yeah. And I think as an expat, there's some unique challenges that come with setting financial goals for sure. This can be fluctuating exchange rates. It's something you need to take into account. Local tax considerations, access to U.S. investment accounts, all of that can really complicate things. Especially for people like us, right? Like a lot of the income we're earning is for our example is in USD, right? And I'm living in Euro, you're living in Swiss francs. Those fluctuating exchange rates really can have an impact. So it's a bit difficult to kind of plan around stuff like that. So important to keep in mind.
Yeah. And it can feel overwhelming. It can totally feel overwhelming. And I think we both work in that capacity of sometimes we are the person that people are checking in with us just to stay on track. Or, for example, like right after the election, like the markets, went up, the dollar kind of jumped up a bit too. And so it's just kind of like the market's going to go up, currency rates are going to go up and down, things are going to fluctuate. Day to day, I don't really care. We're looking for long-term trends, and that's the important part. And if you're just getting started, though, and you're just starting to invest, it can feel really scary. It can feel really overwhelming. Again, find those people who are going to help you keep accountable and maybe just answer some of those initial questions or fears so that you can keep making progress on those goals.
And that really plays into the fact that setbacks are normal. Don't let them throw you off. Don't let a market fluctuation stop you from investing, or, something like a big expense coming up stop you from saving. So,
and you've heard me say this a million times to people, right? We're going to put this money in. It might go down 20% tomorrow. How does that feel? Like that.
It feels bad for everyone, but that's
but
investing.
Right? And I think we have to take that, bad things will happen, right? The market is not going to go up every day for the rest of your investing career. It will go down. There will be days where we will go down 30 or 40%, and it will be terrifying. But that's why it's important that we have that emergency fund in place, that we have the money in the right place that matches our timelines and our goals, so that we don't just have the money that we need tomorrow drop 30%.
Yeah, for sure. All right. Well, I think we're at time. So that is it for today's episode. We hope you're feeling a bit inspired to set some financial goals for the new year and really plan for a successful 2025.
Awesome. Thank you so much, Savannah. Have a great new year. Thank you for tuning in. Stay tuned for our upcoming episodes packed with insights and stories to empower your global financial journey. This is Passport to Wealth, where your financial future knows no borders.
The information provided in this podcast is for informational and entertainment purposes only. It should not be considered professional, financial, or tax advice.
We strongly recommend consulting with a qualified financial advisor, tax professional, or other appropriate expert before making any financial decisions or taking action based on the content discussed in this episode.
Your personal financial situation is unique, and a professional can provide tailored advice to meet your specific needs.